So you're probably watching this on a device that you also use to send and receive money. Whether it's splitting a bill with friends, paying for groceries, or sending money back home to family, digital payments are just a part of our daily lives. Now think about doing that across borders. That's where things get interesting. We're talking about the global remittance industry, a market that's already worth over $700 billion, and is just getting bigger every single year. It's a space where speed, reliability, and low cost aren't just features. They're necessities for millions of people every single day. Every tap on an app like Sendwave, Remitly, or LemFi represents a connection. A family member supported, a business deal closed, or a student's tuition paid. The underlying technology that makes this possible is becoming more accessible, but building a platform that people trust with their hard-earned money, that's the real challenge. It's a puzzle of technology, regulation, and user experience. And as the world gets more connected, the need for seamless, instant cross-border payments is only going to grow. It's a huge opportunity, but one that requires a serious, thoughtful approach to get right. I've been looking at this space for a while, and it's clear that while the big players are established, there's always room for innovation. The demand for easy, low-cost international money transfers is booming. Here's how you can build the next great payment app. We're going to break down the entire process, step by step, from the legal hurdles and the tech stack all the way to security and making sure it actually works. It's a deep dive, so let's get into it. Alright, first things first, before you write a single line of code, you have to do your homework. This isn't like building a social media app. You're dealing with people's money, and that means regulations. Lots of them. Your first big step is understanding the specific corridor you want to serve. Are you building an app for transfers from the United States to Nigeria, the United Kingdom to India? Each corridor has its own unique set of rules, user behaviors, and existing competition. You need to know who you're up against and what pain points you can solve better than they can. Is it speed? Lower fees? Better customer support? This initial research is everything. Once you've defined your niche, it's time to face the regulatory bodies. This is non-negotiable. In the United States, you'll be looking at getting a money services business license. In Canada, it's FinTech. In the United Kingdom, it's the Financial Conduct Authority, or FCA. These licenses are your permission to operate, and they prove that you're committed to running a legitimate, secure service. The application process is intense. They'll scrutinize your business plan, your funding, and your compliance procedures. It's a high bar to clear, but it's the foundation of building trust with your users. But getting licensed is only half the battle. You can't just hold on to users' money yourself. You need to partner with established financial institutions. This means finding banking partners in the country where your users are sending money from, and payout partners in the country where the money is being received. These partners could be major banks, mobile money operators, or even cash pickup networks. Building these relationships takes time and effort. They need to trust you, and you need to integrate with their systems. This network of licenses and partnerships is the invisible infrastructure that your entire app will run on. Okay, so you've navigated the legal maze. Now it's time to talk about the tech. Building a payment app is like building a skyscraper. You need a rock-solid foundation, and that's your tech stack. Let's start with the part your users will actually see and touch, the front end. This is your mobile app, your user interface. You'll likely be choosing between native development, Swift for iOS, Kotlin for Android, or a cross-platform framework like React Native or Flutter. Native gives you the best performance and deepest integration but requires two separate code bases. Frameworks like Flutter let you build for both platforms at once, which can save a ton of time and money, especially for a new startup. Next up is the back end. This is the engine of your entire operation, the part that does all the heavy lifting behind the scenes. It handles user authentication, transaction processing, fraud detection, and communication with all your banking partners. Popular choices here include Node.js, Python with Django, or Go. The key here isn't just picking what's trendy, it's about choosing a technology that is secure, scalable, and that your team knows well. Your backend needs to be able to handle thousands of transactions without breaking a sweat, because in finance, downtime isn't an option, and all that data needs to live somewhere. That's your database. You'll probably use a combination of databases. For your core transaction data, something like PostgreSQL is a very common and solid choice. For other things, like user profiles or session data, a NoSQL database like MongoDB or Redis might be more flexible and faster. And all of this, your front-end, back-end, and database, will almost certainly be hosted in the cloud. Using a provider like Amazon Web Services, Google Cloud Platform, or Microsoft Azure gives you the ability to scale your infrastructure up or down on demand, which is crucial for managing costs and handling growth. A cross-border payment app is useless if it can't handle different currencies accurately. This is where foreign exchange, or FX, comes in. You can't just pull the exchange rate from a Google search. You need real-time, reliable, and transactable rates. This is not something you build yourself. Instead, you integrate with a specialized service through an API. Think of an API as a messenger that lets your app talk to another service and get data back. For FX rates, you'd look at providers like Wise Platform, Currency Layer, or Open Exchange Rates. When a user wants to send, say, $100 from the United States to Europe, your app needs to make an API call in milliseconds to get the current US dollar to euro exchange rate. But it's not just about getting the rate. Your app needs to be able to lock that rate in for a short period, maybe a few minutes, while the user completes the transaction. Currency markets fluctuate every second, and you need to protect both the user and your business from that volatility. The API you choose should provide this rate-locking functionality, giving the user a clear and guaranteed amount that their recipient will get. This integration is also where the user experience really matters. The app should automatically detect the user's location and the recipient's currency, presenting the live exchange rate and the final payout amount with total transparency. Any fees you charge should be clearly broken out, not hidden in the exchange rate. This is a major point of trust. Users are tired of the hidden fees charged by traditional banks. By using a reliable FX API and being transparent, you can show users exactly what they're paying and how much their loved ones will receive down to the last cent. So you have your licenses, your tech stack, and your FX rates. Now, how do people actually get money into and out of your app? This is the payment infrastructure, the digital plumbing that moves money from point A to point B. Let's start with funding. How users add money to their account or fund a specific transfer. You need to offer multiple, convenient options. The basics are bank transfers, like ACH in the US, and debit or credit card payments. To handle this, you'll integrate a payment gateway API. Stripe and Flutterwave are two massive players in this space. Integrating these APIs lets you securely accept card payments without ever having to handle or store sensitive card information yourself, which is a huge security and compliance win, but you should also think beyond traditional methods. Integrating with services like Apple Pay and Google Pay can make the funding process a seamless one-tap experience, which users love. The goal is to make it as easy as possible for a user to initiate a transfer from whatever funding source they prefer. The fewer steps, the better. Then there's the other side of the equation, the payout. How does the recipient get their money? This is where your partnerships with financial institutions become critical. Your system needs to push payments out to different endpoints. The most common is a direct deposit to a recipient's bank account. But in many parts of the world, mobile money wallets, like M-Pesa in Kenya, are more common than bank accounts. You'll also want to consider cash pickup at a physical location for users who need access to physical currency. Your backend needs to manage all these different payout methods, track the status of each one, and provide confirmation once the money has been delivered. Okay, this chapter is arguably the most important. If users don't trust your app with their money and their personal data, you don't have a business. It's that simple. Security and compliance have to be baked into every single layer of your application from day one. It starts with knowing your customer. This is a legal requirement known as KYC, or Know Your Customer, and it's part of a broader set of anti-money laundering, or AML regulations. You have to verify the identity of every single person who signs up for your service to prevent fraud and other financial crimes. You don't do this manually. You integrate with a specialized KYC or AML provider like Onfido, Jumio, or Verif. These services use AI to have users scan their government-issued ID and take a selfie, verifying that they are who they say they are. Your app will use their API to manage this verification process. Beyond sign-up, you need robust security for the app itself. This means implementing multi-factor authentication, usually via an SMS code or an authenticator app, to protect user accounts from unauthorized access. Every login and every transaction should be protected. Behind the scenes, the data itself must be locked down tight. All communication between the user's phone, your app's servers, and your financial partners must use end-to-end encryption, typically TLS. This ensures that even if data were intercepted, it would be unreadable. Sensitive user data, names, addresses, transaction histories, should be encrypted at rest in your database. You need to be compliant with data protection regulations like GDPR in Europe or CCPA in California. Building a secure platform isn't a feature, it's the core promise you make to your users. You've designed the app, built the infrastructure, and secured it. You're ready to launch, right? Not so fast. The final crucial step is testing. And I don't just mean making sure the buttons work. You need to test every single aspect of the payment flow relentlessly in a controlled environment. This is what a sandbox is for. Your payment gateway partners and API providers will give you access to a sandbox environment that mimics the real world, but uses test money and test data. This is your playground to try and break things. Your testing plan needs to be comprehensive. You need to simulate successful transactions to every single country and payout method you support. Send test payments from a US bank account to a mobile wallet in Ghana, from a UK credit card to a cash pickup location in the Philippines. Confirm that the FX rates are calculated correctly, the fees are applied transparently, and the notifications are sent at every stage. You need to create a detailed checklist and go through it for every possible user journey. This is tedious, but it's how you catch bugs before they affect real users and real money. But testing the happy path is the easy part. The real test is simulating what happens when things go wrong. What does the user see if their card is declined? What happens if a partner bank's system is temporarily down? How does your app handle a transaction that is delayed? You need to test for error states, timeouts, and edge cases. You should even simulate chargebacks and refund processes. Thorough testing in the sandbox gives you the confidence that your app is not just functional, but resilient. It ensures that when you do finally launch, you can provide a smooth and reliable experience from day one. So that's the blueprint. Building a payment app is a massive undertaking, but it's also a chance to build something that has a real impact. Once you're up and running, how do you actually make money? There are a few standard models. The most common are a small, transparent transaction fee on every transfer, or making a small margin on the foreign exchange spread. As you grow, you can introduce premium services like faster transfers for a higher fee, or business accounts. You can also build referral programs to incentivize growth, or even white label your technology and offer API access to other companies. If I were to give any advice to someone starting out, it would be this: don't try to boil the ocean. Start with a single, specific niche market or payment corridor that you understand deeply. This allows you to focus your resources and build a product that perfectly serves that community's needs. From there, your reputation is everything. Build trust by delivering money quickly and reliably, being completely transparent about your pricing, and offering excellent 24/7 customer support for when things inevitably go wrong. And always stay on top of compliance. The rules are constantly changing. This is a complex but incredibly rewarding space to be in. Want to build your own international payment app? Start small, scale fast, focus on trust, speed, and transparency. Remittances are just the beginning. The skills and infrastructure you build can be the foundation for all sorts of other financial products down the line. It's a long road, but the opportunity to build the next great fintech company is right there. Peace. Subscribe for more fintech and AI development insights.